Good evening, everybody. A nice summer evening here in Pittsburgh. Had a little bit of consolidation going on in the market. Before I go too far, I want to remind everybody that we are trying to schedule a private training session in Las Vegas for July 23rd. I guess it'd be July 23rd and 24th. Now, a couple people from Las Vegas have said it's the worst time of year because it's going to be hot. But I figured we're going to be inside the whole time. But this is one of those sessions where if you've got some kinks still in your trading, this is the excellent place to get them hammered out and definitely get a full grasp of the logic built into candlestick analysis. I guess the underlying factor of it all is when you keep finding or learn which trade setups consistently put the probabilities in your favor, now you're trading based upon your insights of knowing what the high probability trade setups are versus listening to what everybody else is saying and what seems to be the logical thing when somebody comes out with good earnings or a good report or something and the stock goes down. At least you know what the overall investor sentiment was based upon that information. So today, after the market reversed down here, and kind of did a McMuffin on the Dow, today's selling was consolidation. We're not quite in the overbought area, getting close, but I would still suspect they're coming up to test the 200. And we're seeing after hours the E-minis are trading up a couple hundred points, pretty much close to where they opened today. Ron, we just said July 23rd and 24th, and the private trainings are $4,900 for the weekend. Now that includes dinners, I think even lunches. And it also means you're stuck with me the whole time. It's not the type of thing where we do our session and then I disappear and you all disappear. We go to lunch, we go to dinner. So it's the type of training where it doesn't go in segments. It's one flowing weekend. So with that $4,900, you get 1 year free membership to the website. Also, you get free access to any of the training that we have in our products and services area. And I think right now we got a little over $5,200 worth of stuff. So if you go to a training and you want more stuff to review, you just email Abe and say, I was at the private training. Can you send me the 12 major signals or the top rank signals and patterns? It's all free. That's right. It's a dry heat. So don't worry. We start at approximately 9 or 9:30 in the morning. We break for lunch. And then right around 5:30 or so, we break for dinner. But for those of you that, so the dinner is more kind of going into different philosophies or different aspects of candlestick analysis. So we're in an uptrend. Those are not selling off after hours, but that doesn't mean anything right now. It's what they're doing as the market opens. We can see the same scenario here on the NASDAQ. There's your left-right combo. and you're not anywhere near the overbought area yet, I would suspect the 34 is the first target. If it gets through there, I think they could eventually come up to the 50. Crude oil, still drifting higher, 115. I think at one time it almost touched 120 today. And I was lollygagging when I missed the open on hogs, and it traded lower. That would have been a good trade. Now, still watching to see if it trades lower tomorrow. Means they could probably be bringing it back down toward the 200. Everything else, cattle. Not really any great trading, but trading lower, and see what wheat has been doing. Wheat continues to trade lower. Oh, anyways. Oh, roasting. Okay, we recommended ZS, but here's a good example that not only do you want to recognize the signals that telling you the bulls may be taking control with great probabilities, you still need to see confirmation. It didn't confirm. Now, do you give up on this chart? No, because you still have strong bullish sentiment, so you just use today's open. Logic says if they come back up through there, that bullish force is still in progress. And MQ backed off, but what type of pattern are we looking at? And this, I'm kind of stressing this because if we've got a bobble breakout, what is our expectations? That we're in an uptrend, wave 3, as long as they don't close below the T-line. Now, the reason you want to use that T-line rule is because we know the probabilities are extremely strong that as long as you stay above the T-line, you're still in an uptrend. So even when it looks dicey, your analysis still needs to be what was the pattern, and is it still confirming that we're not closing below the T-line? So a lot of people are asking, what should we do with MQ today? My answer is you stay long as it doesn't close below the T-line. This one finally came alive today, Mullen, and this is why you always keep an eye on these story stocks. They reported that their new battery technology has increased to where one charge can produce 600 miles on a car battery. So now, has this gone too far? Not really, because what does this represent? A new interest in that stock. Let's see. Enos, you might need to go up to your top right corner where the red X is, click that, log out, and come right back in and see if that doesn't give you a better connection. CPT, still a nice Frypan bottom. You stay long. And somebody was asking earlier, what is the 3T line? The 3T line is the 3 exponential moving average. And there's just some very simple rules for it. But as long as you're above the 3T line, obviously you're above the T line. And if you're above the 3T line, it's telling you there's still a lot of strength there. And the 3T line becomes more relevant the further if you start moving too far away from the T line. So here's another example of something breaking out, telling you there's a brand new dynamic in that stock price. So we recommended APY X last week because of this breakout. And remember, the breakout is just kind of a visual alert something major has changed, and that not only changed, but great interest has come back into that price movement. IMTE still working nicely. However, look at what happened up here. Excuse me. A long-legged doji that failed at the 50, that supported back down here at the 34, the T-line area. But remember what this illustrates, that there's now a lot of indecision between the bulls and the bears. And where is this all occurring? Obviously at a resistance level that everybody's watching right here at the beginning of this Frypan bottom. So this is what makes the doji rule or candlestick trading rule that much more relevant. So if we know the doji tells us there's indecision, kind of failed at the 50, doing a doji harami in the overbought area makes this very simple. If they open this lower tomorrow, that means that was the indecision failure. Close out your trade. Now, does that mean it's out for good? No, you can always buy it back if it does a J-hook type pattern back up through the 50. And SIGA was an illustration of the high probability factor that if you see a big move like this and they gap it down and trade it lower, this is dead until you see another buy signal. So this one was closed out today, or the remaining position was, but we'll still watch to see if the buyers come back into this one. Well. Light speed. Still a nice Frypan bottom. Did a little consolidation today, but didn't change the bobble breakout trajectory. And H&R block. There's your J-hook pattern, still in progress. Notice that not only are you above the T-line, but you're above the 3T line. That 3T line just gives you a little bit of extra visual that the strength of the current trend is very strong because it's above the 3T line, which is even more sensitive than the T line. And this one, we closed out. Now, after hours, it closed up here, but I saw what the volume was, like 200 shares. So you still have to wait to see. So then we close this one out, because where should it not be closing if we're in an uptrend? Definitely should not be gapping down and closing at or near the previous day's open. That's not a good bullish indication. Valero, kind of a dark cloud situation. Still above the T line, but now instead of a trend that might be moving like this, more like a trend like this. SWN, kind of the same scenario. Not quite a dark cloud, but you're in the overbought area. I would have a safety stop at today's low, because if it came down through there, they're still heading in this direction with the expectation that you're probably coming back to test the T-line. And lithium backed off, and a lot of them did. And somebody said that it was because somebody announced that there was a lot of lithium, or lithium could supply everything. But that's part of that whipsaw kind of scenario, that on any given day, prices can move up or down based upon the previous or the most frequent, not frequent, the most recent announcement. So when you have something whipsawing like that, what's your ultimate criteria? As long as you're above the T-line, got to figure that's just oscillation. You stay long until you see a sell signal and a close below the T-line. So lots of good bullish charts still, and lots of good bearish charts still. So this is what I call observe the obvious. Carvana, in a downtrend, failed at the T-line. Came back up, failed at the T-line. This still kind of portends a bad situation. But as long as they're in a downtrend and they can't get back up above the T-line with any great resiliency, there's somebody knows that there's something wrong in River City. Amazon's a good example of the lack of any bearish sentiment in the market. The bulls are still around if they're buying Amazon. Kind of the same scenario with Apple. Nvidia backed off a little bit today, but not anything that will tell you there's any change of investor sentiment. Stochastic's still heading up. You had kind of this bullish engulfing type signal. Stay long, but right now I'd use today's low as a stop. So the nice thing about the visuals of the candlestick are you can see where it shouldn't trade if you're in an uptrend. So Netflix got this curvature, but it shouldn't trade back below the T-line. That would tell you the upward bullish sentiment has now disappeared. That was Netflix. And then I'm keeping an eye on QuantumScape again. This might be a little double bottom. And reason, again, another story stock that on any positive news about improving their technology, it could open here, it could open here, it could open way up here someplace, depending on what that news creates. All right, so Mullen is a good breakout situation. Neon had that same situation back here with that kicker type signal. I say kicker type signal. You usually want to see a big bearish candle, a big bullish candle. But even if you have a small bearish candle and a gap up and go in the opposite direction, that illustrates the same thing, that investor sentiment has moved drastically in the opposite direction. MARPs, there's your junkie trading and now your best friend signal. I guess not your best friend, but your message. Doji gap up. This one has a very easy entry strategy. It comes back up through today's open. That means the exuberance that was shown here with some profit taking. The profit taking's over. The exuberance now comes back into play. There's another best friend double doji setup. And what's relevant about this gap up right here? You can see where it broke out, making this another one as a high probability trade. HYG, yeah, did some backing and filling, but not anything that would be, again, I'm not looking at this as a buy or sell signal. I'm looking at this more as an indicator. So even though it backed off a little bit today, nothing that you would say that that's changed the overall investor sentiment. Now, logically, we want to see it kind of hovered in here. If they opened lower and started trading lower, Yeah, that might be giving you a sign that there's going to be some profit taking, that the overall investor sentiment's turning a little bit soggy. Oh, so there's kind of another bobble breakout. You'll probably see this one on the recommended list tomorrow. Only because anytime you see this setup, the probabilities are extremely good that it's heading higher. This is, again, one of those high probability trade situations. And this is your McMuffin. Your morning star signal followed by a doji sandwich. The one that you'd probably want to be buying with a high degree of confidence, because if the morning star signal is a reversal signal, one of the 12 major signals, and a doji sandwich implies there's going to be more upside, when you add those two together, you get a much better probability factor that the bulls have taken control. And Hive, doing a little scoop pattern. Now this opened higher and closed lower, but if it trades back up through this level, or even up through the open, you want to start buying, because that's kind of the setup for a slingshot effect to the upside. Euro, a J-hook pattern setup. And observe the obvious. Bounced off the 50, doji at the T-line. This one could be bought on positive trading. And BKKT, that gap up doji makes it pretty easy to identify that if you open positive, after that you usually got to be fulfilling that bullish sentiment. Kind of the same scenarios we saw over here on SIGA. They started running this one. So use the doji rule, and you're going to put yourself in situations where the probabilities are pretty strong that you're in the right direction. Not only in the right direction, but if they've been gapping up, that means there's probably a lot more bullish sentiment to follow. Doji sandwich on micro strategy. That one can be bought. And CDEV, it was trading higher today. Here would be one that if I had bought this today, because it broke out through the 50, as soon as it came back down through the open, you close it out. Bert, that was Neuro. N-U-R-O. All right, and did I mention CDEV? Oh, that's right. So here's another closeout strategy, meaning if you buy this because it's doing exactly what it's supposed to be doing, gapping up and moving positive, that as soon as it comes back down through the open, you close it out, because what was indicated when they opened it here and started trading positive? The bulls were in control. As soon as it came back down through the open, that told you the bulls weren't in control anymore. Get out of the trade. Sava, another bobble breakout that had some profit taking, but if it opens positive, you can still be buying this one. Oh, KDD, I don't remember. No. The one before Nero. Oh, KOD. KOD is your bobble breakout. about that? This one's not coming up, but BOWL has got a good bobble breakout. And laser, also a little scoop type pattern that you could be buying this one on positive trading. Let's see what else we got here. NKTX, look where your wedge type formation formed right here on the 50 and the T line. Where do you suspect your first target? Right back up here to the 200, then watch to see if it breaks out through that level. YMM, was acting better earlier. Whoops, but that was not the right YMM. So can't get that one over here. MLTX, that gap up, very easy entry. If it opens positive, you can be buying with the expectation of a strong doji sandwich type breakout. MSTR, did we do this one already? A doji sandwich. UFIN, another bobble breakout doji sandwich. Look for the next target, the 200. Again, these are just setups that tell you there's an extremely high probability that not only are they moving in the right direction, but they're probably going to have a strong price move in that direction. Jenko. So now you have to be careful on something like Jenko. Looked like it was breaking out nicely. But notice what it did by the end of the day, your shooting star signal. That relevant up here? Well, one, it did it right at this level, and two, look at your stochastic start to roll over. That would tell me if I was long Jenko and it did that, it has to open positive and trade positive to stay in it. If it opens lower, it means they've failed here with a shooting star. They're at least coming back to the T line, which means you probably want to come out of the trade and wait to see what it does at the T line. Some reason that, oh, I know what that was. Inverted hammer, doji, gravestone doji, bullish confirmation. This is all allowing you to identify the basing action. You can get ready to buy this one on positive trading because that would be confirming your bullish signal, close above the T line after a series of doji type days. That's a good high probability trade setup. On the bearish side, that's not it. No, darn. What am I looking for? Something like this, MARI. That's just big lots. That's your gap down. On your gap down bearish flutter kicker. That means they want to get out of this. What about the pushback wicks? Matt, I don't know what a pushback wick is and what does that mean? So big lots, you want to stay or think about going short. PMPV, PMVP. That long-legged doji closed back below the T line. What does that kind of tell us? This downtrend is still working. The second one before this one. All right, what about it? The pushback wicks. Wouldn't call them pushback wicks. I'd call them inverted hammer, doji, lots of indecision. Now they're telling you which way. Well, yes, what's that telling you is you're in a downtrend. The bulls try to take it up. The bears knock it down. The bulls try to take it up. The bears knock it down. Same thing, except here, the bulls now are there and the bears didn't knock it down. So all this indecision here is now being kind of sopped up. So those are reversal signals. That one being the most potent, an inverted hammer signal. There's a gap down. I'm guessing that must have been earnings on Fro. I suspect that might come back down to the 50. Oh, this one is a big bearish engulfing signal after hours, which kind of confirms this downtrend. So look what started the move to the upside. There's your bullish flutter kicker. There's your bearish harami that closed closer to the lower end of the trading range. That took all the wind out of the sails. All right, thank you, Jay. Yeah, Ronald, just hang on to your individual ones until I tell Jim to do the double line. And then we'll do everybody's requests. And TDW, big bearish engulfing signal. The bigger the signal, the more compelling you're starting to see seeing a reversal. Arch, there's your bearish flutter kicker signal. That you'll probably see on the recommended list of going short on weakness tomorrow because of that signal right there. So here's another example that if you were long and you saw this move the next day where they gap down and close right close to the previous day's open, close out the trade. It's not a good trade anymore. Another bearish kicker signal on NTCT. Implies more downside. And AMBA. That must have been something more there. Yes, so after hours, looks like it dropped some more. So AMBA, you want to short on weakness, which could be down in this area tomorrow. All right, so take a look at the YMs right now. Yeah, almost back up to today's open. But as I say, the futures tonight don't mean a hill of beans. It's what they're doing about 10 minutes, 7 minutes prior to the open. That's where all the big money is making their decisions. Okay, I think that's about all I got for tonight. Again, there's still some good-looking charts out there. And when I say good-looking charts, at least you have the prospect that even if the market might be a little bit indecisive, we can still see patterns that, if they confirm, have high expectation results. Okay, so are there any general questions on candlesticks? You don't have to really look for, I'm sure we probably got a software for doji sandwich setups. Oh, that's on Arch. All right, thank you for that information. That's why you'll have to see where it opens. I don't know of any. Now, usually you will find them based upon your previous scan. I'm trying to think of one. Oh, I know. You probably would have found this one. Say you're watching this setup. There's a Morningstar signal. It would have come up on one of your scans. And you're thinking, all right, is it going to pop up? No, it did kind of an indecisive trading day. But we now have a strong candle and an indecisive trading day. That tells me if it opens positive, what's it going to do? Not only is it going to have that type of day, but that type of day would take you up through the T-line. So it's not like you're scanning for it's not like you're scanning for an individual doji sandwich setup. You probably already have the setups already being established. George, I don't know. Would you have been obligated to pay, since you were shorting it, pay somebody the dividend? Rob, yes, the futures market is always open. I think they shut it down over the weekend. But if I'm trading and I'm watching to see what the markets might be doing on any given day, I'll go to the YMs. Say, all right, what's happening right now? Well, they're oscillating. It looks like they're bringing it up. So at least I can get a feel for what they're doing in the general market itself. Yeah, Magic, if you set up your scans at night saying, I'm looking for all the dojis that have occurred in the oversold area, and you flag them and put them on your doji watch list, then the next day as the market opens and you refresh that list, you'll find the ones that have opened up the strongest or gapped up. That would be your best friend signal setting up. Should we not look at the futures market while the stock market is open? Yes, you can. That's exactly what the futures market, that's what I was just explaining, is that if I'm watching to see if the market itself is continuing up, or what is the market planning to do? Well, right here I can see on the 10-minute chart they were starting to buy again. Up till that point, it wasn't really decisive. Walter, if you have, well, most charting services, I mean, the futures depend on what charting service you have. Again, this is CQG, so it has the futures, and so the E-minis are for the Dow is YM, For the S&P 500, I think it's ES. Yeah, and the NASDAQ is the Qs. Yep. Let's see. If I flip through all the best friend results from my scan at the open, I should see things like MSTR. Yes. So if you had found this one on your scan from bullish engulfing, and then you were watching and say, oh, it's traded positive, but it's a doji. Now what can you anticipate? If it opens positive the next day, you could be buying because that more than likely is going to be your doji sandwich. When entering a trade, you said to use the 10-minute chart. When exactly should you be looking for in terms of candles versus stochastics? The exact same thing as you would on a daily chart. If I was thinking of buying micro today, what did my 10-minute chart tell me? Now they gapped it up, consolidated, and then started taking it up. How long would I have stayed in this one if I was day trading it or trading it off my 10-minute chart? Close it out right there. It could be that. And Rob, the worst case scenario is you just call up Ameritrade and the trading desk and say, I'm trying to find what your NASDAQ symbol is. Some of them will be composite, COMPQX or something. Oh, yeah, that all depends on what futures you're trading. I forget what they are on each one. Used to know all this. Contract spec. Means on crude oil, for every 1 penny that it ticks up, it's 10 cents. Now that's pennies on crude oil. Let me see what clean hogs are. Contract spec, for every 2.5 cent increment, that's $10. No, I don't trade the OTC pink sheets just because I don't have access and I don't need access. Right now, with all the scans, there's 9,500 trading entities. I think just on the listed exchange. And then I've got it narrowed down to where my universe is about 3,000 stocks greater than $5 a share and trading more than 200,000 shares a day. Now, a lot of services won't even bring up the pink sheet, so you don't have any access to seeing what their charts look like. Okay, any other questions? If not, Jim, go ahead and do the double line. And in 3.2 seconds, do the next double line. You have an upper limit on the number of positions you'll hold. Gary, yes, that's all part of the money management that I use. For example, if I've got $500,000 account, I've already established I'm going to have 10 positions. And each one of those positions will be a $50,000 position. The reason for that is I want to keep my emotions out of my trading. So every time I put on a position, it is 1 unit of my portfolio. Because if I know that normally I put $50,000 into a position, I think to myself, oh man, this is a real good one. I'm going to buy $80,000 worth of this one because I know it's going to work better. Well, you can bet yourself dime to donuts that you'll spend 90% of your day watching that position versus the other ones. When they're all equal amount, you're analyzing each one as a unit of your portfolio. Jimmy, that one you could buy on the breakout. So obviously it's broken through this level. So if you're buying on positive trading, don't let it close back below the halfway point of that candle. Leah, there's your doji sandwich breakout. Stay long on this one. Crude oil has been holding up. I say holding up. It went up to $120 a barrel and closed at around $115 a barrel. But that might be a kind of a bearish belt hold that tells you there's going to be some profit taking. APLD, not a lot of history to it. You can stay long on this. Just make sure it's got a, does it have good volume? Yeah, I would use the halfway point of this candle if I was buying tomorrow. That would show too much weakness, which also might be corresponding to where the T-line would be tomorrow. Costco, all you can do is stay long. And some trivia information that's not worth the hill of beans. I was buying 40-pound bags of Audubon birdseed for $13.97 a bag. Just over a year ago. Now it's at $25 a bag. Micron. You can stay long. Need to see it break out through this level. So I would use today's low as a stop. It shouldn't come back through that level. And Big C, I would have closed that one out today. That's pretty much a nothing chart. Let me see if I can get it. YMM is just bringing up the YMs on this chart. Dipsy. John, that's a nothing chart. If you're thinking of buying, it has to open positive, giving you kind of a doji sandwich, but apparently there's not enough, there's not enough information there. You really can't be too much help on that one. And Joby, you can stay long, use the T-line as your stop. Yeah, that's a dark, not a dark cloud, but that's a meeting line. Notice they opened here, closed here, opened up here and closed right about the same level. If you're long, it has to open positive and trade positive. If it opens lower, it's coming back to test the T-line, which makes that a nothing chart. Yeah, it has to open positive. But that's not a good signal when they gap up and then bring it right back down to the previous trading day or range. Rami, Doji, not in the overbought area, so you use the Doji rule. It's going to move in the direction of how they open after the Doji. Blackstone, another one that if you're long has to open positive. If it opens lower, it's coming back to test the 50, which doesn't make it a good chart. It means it's still in this downtrend. Oh, boy. ARCH. Yeah, we did that one. Paid out a dividend today. APLD. Stay long. Use the T-line as your stop. And DWAC. That's a nothing chart. Would not be long or short. Nah, probably wouldn't even short this if it opens lower because you're in a wedge, so it doesn't have any great force in one direction or the other. Light speed, just stay long. That bubble breakout is still working. How can we find a Frypan bottom scan for stocks without using MetaStock? Oh, boy. Rob, look down in the file folder in your bottom right-hand corner of this page. See if it's in there. Now, you don't necessarily need to be scanning for Frypan bottoms. Frypan bottoms usually have a time, big time to set up. And it's not going to be usually found here. It's usually going to be found on a day like this. We have a big percent price move that shows up on your scan. Say, hey, coming out of a Frypan bottom. That's how you detect the Frypan bottom. Taiwan. Boy, if you're long, stay long. Obviously, you need to get up through the 50. So again, your doji is going to kind of give you an indication of which way that was it. Thank you, Ralph. That the doji is going to give you an indication of which way it's going to go based on its open. So this one, Marvia, that one you can get ready to RVI. That one you get ready to short because you can see the direction. It's down ever since they failed at the 200. So where's your next likely target? Down here somewhere. I think we did NVIDIA, didn't we? NVIDIA, you stay long, use today's low as your stop. Blink, nothing of any great magnitude yet. If you're long, it has to stay above the T-line. If you're thinking of going long, I'd wait for it to come back up through today's open. PLL, if it opens lower tomorrow, you close it out. It's coming back to the T-line. To stay long, if you're long, it has to open positive and trade positive. If you're thinking of going long, you wait for it to come back up through today's open. And run. Yeah, but you're just breaking out. So right now, I would stay long as long as this doesn't close below the T-line, which in a day or so, or maybe even tomorrow, that would also correspond with the T-line. And UNH, that bullish Harami kind of took the wind out of the sails. They opened it lower and brought it back up, but now they haven't been able to sustain it. If I was long, another one that has to open positive and trade positive. If it opens lower, looks like you're rolling over. Blackstone needs to open positive and trade positive. Zillow, that's a nothing chart. If you went long over the last couple of days, it has to open and trade positive. If it opens and starts trading lower, close it, it's going sideways. Oxy backed off a little bit today. Dark Cloud, another one that if it opens lower, takes some profits, and watch to see what happens once it gets to the T-line. And ENPH, also having a little bit of problems getting through this area. Same scenario, doji rule, if it opens lower, close it out. They're coming back to test the 50. ABDL, nothing. Would not be long or short on this one. Doesn't matter what the monthly is doing. That's just an ugly looking chart. And Sava did a bobble breakout. You can buy this one on positive trading. ZSEN, that's a nothing chart. Would not be long or short this one. Expensive birds. We did AMC, has to open positive. And GME, GameStop, that one I would have closed out today with it coming back down through the bottom of Friday's hanging man. Wedge pattern, yeah, usually has a good force breaking out one way or the other. Santa, that's a Frypan bottom setting up. Yes, I wouldn't be afraid to be buying this one on positive trading. So notice that your Frypan bottom started with a kind of a doji sandwich. That would have been the alert. And then you can see that it was somewhat of a Frypan bottom facing action. Mullen is the type of chart that gives you an alert to say there's something new going on or they like the news, because when they gap it up and trade positive, it tells you there's a new dynamic in that stock. We illustrated that a few weeks ago with Neon, and it did a kicker type breakout signal that bearish candle gap up. So anytime you see that gap up, that means something new has come in that's creating a lot of interest. Tesla, you stay long, use the T-line as your stop. Okay. Guess that's about it for tonight. We have to assume the uptrend remains in progress in the indexes as long as we're above the T-line, but that doesn't preclude coming back for a couple of days and testing the T-line. Again, indicating that we're not going straight up, might be going up in increments. All right, everybody, we will see you bright and early tomorrow morning in the chat rooms. We'll see you then.